Hello, everyone, and thank you for joining today's conversation, Cobra in the COVID-19 era, 12 things employers need to know. My name is Mike Vanoy. I am the head of marketing here at Assure, and joining me for today's conversation is Heather James, who leads our benefits operations in Tampa, and also Stephanie Carlson, who's an Assure benefits account manager. So Heather comes with a ton of domain expertise here. She's been in this space for a long time. Really knows the ins and outs. I'll call her our policy wonk for today's conversation. And Stephanie, as an account manager, talks to customers all day, every day, so can really bring some real life stories. So normally we're talking about topics on this webinar series about how to help small and mid-sized companies grow, right? In how to think about human resources, payroll, human capital, how to manage all that to grow their businesses. But in a COVID era, there's a ton of compliance stuff, right? That honestly doesn't get all the same amount of sex appeal. Now, there's a ton of really, really important high interest stuff when it comes to COVID, like PPP loans and forgiveness and EIDL loans, tax credits. But I think something that's really, really important in small business owners and entrepreneurs, you've got to understand this, because the consequences can be pretty severe if you don't understand this world around Cobra. And honestly, it's one of those things that I think people maybe put to the back burner because, who wants to lay off an employee? No one, right? We want to hire employees, we want to attract talent, we want to grow our businesses. But there are, in fact, legal requirements for small business owners from mid-sized companies as you think about having to face laying people off. And that is just, unfortunately, a terrible consequence in this COVID era. For some people that were work from home business services companies, they didn't have to face this. Others, had no choice as their local health officials shut their businesses down. And boy, looking at the numbers every day on cases, there's obviously a second wave here that is already shutting additional businesses down for a second time. So this is a really important topic. I think it's an underserved topic. But one every small business owner needs to understand. So with that, the way we decided to break this down was we broke this down into 12 different questions. Some of them are going to be a little bit about Cobra in general, but really specifically in the context of COVID, there are some new things that you have to know, because they're not only they're important rules, but the rules changed. So with that, Stephanie or Heather, I don't care who goes first, but kind of laid on us. And from one perspective, this is really simple, because there's like one big single change that happened as it relates to Cobra, but the cascading impact of this is really big, which is why we got 12 different questions here. So who wants to take on and just kind of help everybody understand what is the big change to Cobra?
Absolutely. Yeah, I'll go ahead and start that. So April 29th of this year, an emergency regulation was issued by the Department of Labor and the Employee Benefits Security Administration, as well as the IRS, to provide some relief and guidance that would affect those impending Cobra guidelines that we're all used to. So basically, otherwise known as the outbreak period, this is going to be the beginning period starting March 1st. So anybody that's in their election window, people that are currently participating on Cobra, they are now getting an extension of 60 days from the federal government that declares during the COVID national emergency period. So they're going to get 60 days in addition to what they have to elect and to make payments once that outbreak period is over. Now, there is no defined end date as of right now for that outbreak period. So for example, if it was to end the end of this year, so 12/31, they would have 60 days from 12/31 to still elect and make payments retro back to that date. So if they have defaulted and have not been making Cobra payments for that period of time, or have chosen not to elect during that period of time, they will still have that opportunity 60 days after that outbreak period has an official end date. So they would be, responsible for, retro paying those payments or making those elections should they need it. And the big thing right there is just making sure that they have that leniency and that time to, save and make those payments, without the risk of losing those benefits. So that would be probably the biggest change, that we've seen in a very long time in regards to the Cobra. It's also made some changes to some of the verbiage and language that's on the model notices for Cobra reporting. So the Cobra notices that, are sent out to the employees, whether you're an employer doing it in-house, whether you're a third-party vendor, that language has affected everybody and is required to go out on those notices that go out to anybody that's, in their initial notice window or, even going on to Cobra.
Hey, Heather, do me a favor. So, I mean, I think pretty much everybody on the call knows what Cobra is. That's why they joined. Probably a few people remember this. This goes back a couple decades now, but what it stands for, it's the Consolidated Omnibus Budget Reconciliation Act, Cobra. But when you say whether business do it in-house versus they outsource it, what is the it that they do? Just level set to make sure everybody's on the same page here.
Yeah, absolutely. So the Cobra administration is basically, for all intensive purposes, is an extension of the active benefits they had once employed or once participating on those active benefits. So they get to extend those benefits to be able to continue the same group plan that they were participating in, while they're looking for other coverage or whether they start another job, but it gives them that opportunity. So whether, you're offering Cobra as the employer or you're offering it as, on behalf of the employer as a third party, it's getting out all the required notices. So the Cobra packet is letting them know what those rights are and how they extend those benefits, now that they're no longer participating in that active group plan.
Got it. And so the big change, so this is a decades old law. Everybody's always had to follow it. You got to give notice to terminated employees. The big change, and we don't want people to underestimate this, is that window of time that is defined as the outbreak period, right?
Right, because normally, so the employer or third party, we have, 30 days to get those notices out to the employee from the date that their benefits end. And then the, enrollee, participant, employee that would be continuing Cobra would normally have 60 days to elect benefits, 45 days to make their first payment, 30 days grace period, going forward with their payments being due at the first of every month. So this whole, regulation that's changed is now basically extending all those rules that we've known, for decades. So having that extension so that, people can, draw out the time that they need to make those payments versus making them at the first of every month by that 30-day grace period. Now that they're having that 60-day extension to once the outbreak period's over, definitely gives them a little bit more of a calming relief, that they've got some time to make up some of these payments because, Cobra is definitely, a little more expensive. And when I say Cobra, it's not really that it's expensive. It's just the employee is now paying the employer portion plus the portion that they're used to contributing along with that 2% administration fee. So, when you're suddenly out of a job or you're no longer, being able to participate in that group plan, it's just a cost that nobody prepares for.
Yeah, and you know what? I mean, business owners care about human beings, right? I mean, it's core to who we are as entrepreneurs. But for so many businesses, just trying to keep up on compliance, this has in the past, I think, been a kind of a check the box, something you just have to do just to follow the law. But we shouldn't hide the fact that this is a really good thing, given the how COVID has impacted people's lives, right? And people's lives are turned upside down in many cases. And to now give the employees who are impacted, more options, more time. This is, I'd say, a good thing. So let's jump on to the next question. So as we've done these webinars, these talks before, we talk about, who has to follow, right? So it's the FFCRA, Families First Coronavirus Response Act, right? Certain types of leave are paid and who's eligible to receive that and what companies are required to comply. Set expectations with us here. about what companies are required to follow this law, Cobra to begin with, but then what, if any, changes to that for who's impacted, what type of businesses have to comply, is the DOL has kind of laid out the modified COVID era.
Right. So this would impact anybody that's offering, benefit plans with 20 or more employees. So the medical, the dentals, the insurances, EAP, FSAs, HRAs, HSAs, those are all Cobra eligible plans. And if they're offering them and they have 20 or more employees, then they are required to send out the initial notices as well as the Cobra notifications. So this would impact all of those type of employers that are offering those types of plans.
So, just so everybody on the call can know. So greater than 50, you've got to be offering the benefits anyway. But if you're in this
Right.
20 to 50 window, and they say over 50 as part of the Affordable Care Act, right? The ACA.
Correct.
But if you're under 20 employees, are you required to follow this law?
No.
So even if you're under in 20s and you provide benefits, that you're not required. But if you don't provide benefits, you're between 20 and 50, you don't have to comply, correct?
Right. If it's over 20 employees, so over 20 employees and you're offering, group plan benefits, you are required to offer Cobra benefits to those employees.
So if you're on the call and you're wondering if this impacts you, Heather, I want you to keep me honest. So
Sure.
I think you can take action here, whether you fall in one of, I think it's 3 buckets. If you're under 20 employees, whether you do or don't provide healthcare benefits, this doesn't apply to you. If you are over 20 employees and provide benefits, it does. If you're over 20 but less than 50, well, and I'd say really anything over, because anything greater than 50, you have to provide benefits anyway. So it's that 20 to 50
Right.
that if you don't provide benefits, I mean, there's nothing to continue, so to speak.
Correct.
Right? So there's no cover to continue. So
Right. So it would be your employers of 20 or more, 20 or more employees, and you're offering a healthcare benefit.
very, very good. All right. I wanted all the listeners to make sure that they understood
Sure.
who this applies to and if this applies to them. And anything else, Stephanie, you would add about the changes to the law and who has to follow and the impacts here?
Yeah, I would just say that those groups under 20, I recommend discussing with your benefits advisor or your legal counsel, because sometimes under 20, depending on how your company is structured, even in that 20 to 30 range, sometimes you can have partners of the company that aren't really considered employees for that count. So always just double check and make sure that you're counting your employees properly for each individual requirement. So, everything's got its own language in there about who's counted as an employee. But those under 20, I know in Illinois, you've got Illinois state continuation. A couple other states have their own individual state continuation plan. Those people, if you're only regulated by your Illinois or your state continuation policy, you are not affected by this. This is only for those who are regulated by federal Cobra, which would in general is your employers over 20 employees.
And Stephanie, to just be really practical for business owners, executives on this call, when you say, hey, you need to, if you're like, this just under, you're kind of on the bubble below 20 employees, you need to verify. How would they do that? How do they verify? Who do they verify with? Where would they go to? What resources do they have to do that?
Typically their benefits advisor, so their broker, or just an internal legal counsel. They can, it's all about understanding the wording in the laws and interpreting it. And then obviously looking up again how your company is structured. So a lot of LLCs, like limited liabilities, your partners aren't always considered employees as far as, being under or over 50, but they might be considered an employee when you're looking at, are you eligible for Cobra or are you regulated by Cobra?
Yeah, I think that's really, really solid advice. So don't just think about, don't just think it's if you've got 19 FTEs, but you've got a few more people that because of your legal structure are eligible for a benefit plan, you may be required to comply and don't even know it. So
Exactly.
always check with your lawyer, and pretty much always a good resource is going to be either your benefit broker who you're buying the insurance from, or the TPA who's administering your plan. So anything else, guys, on who this impacts before we move on? Okay, so we don't want this to be a scare thing, but I think it's really important. So before we kind of talk about a bunch of the use case scenarios here, it is important everybody understands, what bad thing happens if I mess this up, right? So we talked about what the change is, to the outbreak period, who's required to comply with this. And then if you're required and you don't do it, what's the risk? What bad things can happen?
Yeah, absolutely. So failure to comply with those Cobra regulations and getting out those required notices to the employees that would be eligible for Cobra can stack up to about $110 per day as a fine. So if you look under like the IRS regulations, you look under DOL, all of that stuff is out there for you to read up on. If you're ever unsure, it's always good to, like Stephanie was saying, check with any legal advisors that you have, brokers, any partners that you work with, your third parties. Always important to remember, what's a qualifying event, because a lot of people don't realize that it's beyond just terminations and reduction in hours. It's people that are divorced, or if the employee passes away and he has a family that's on that plan. So there's a lot of different qualifying events, that would enable an employee to be eligible for Cobra. So to avoid those types of fines, obviously they can hire attorneys, they can report you to the Department of Labor. So it could get very sticky and messy and very, very expensive by not following those rules.
Stephanie, anything you'd add?
Yeah, just in past lawsuits, if you read up about them, basically they want you to make the employee whole. So these compliance penalties are going to be the same. So it's not anything special for the COVID relief, that they haven't like released new penalties or anything like that, but it's all just now falls under the Cobra umbrella of things that you need to comply with. So you're gonna if the employee files a suit against you, typically the judgment comes down that they need to make the employee whole, and that can be paying all of their claims back as far as their original termination date. So if you go 2 years without offering Cobra, and that employee had claims during that period, and they filed the lawsuit and everything, you could be responsible for paying all of those claims, their attorney fees, in addition to that 110-day fine that Heather mentioned, or $110 per day, sorry. So it does, like she said, it can get very costly for the employer. So it's just really important to do everything in your power to maintain compliance and fix or correct mistakes as soon as you discover them, because at least once you correct them, then you're going to stop that clock from ticking on those per day
Right.
fines.
No, and I think that's,
they want to see that you've corrected it as soon as you saw it. That's what they're really looking for.
yeah, no, that's actually a really good point to bring up too, because I do, we get calls, sometimes in past experiences with the Department of Labor, and really that's the end goal is they want to make the employee whole. So they give you the opportunity, they give the employer the opportunity to make, right of a wrong, because honestly, it could just be a mistake. It could just be that, the letter was forgotten, or maybe the employer didn't realize that that was a particular qualifying event. So, they don't rush out the gates, right away and just start charging fines and fees, for not, doing something that you were supposed to do. They do give you that opportunity to make things right for the employee.
I think that's really good advice. So no one should constitute this webinar as legal advice, right? Always consult with your
Right.
legal professionals. But I think just in our experience, I think we'd say that, you know, while the DOL has some serious teeth, at the end of the day, they're just looking to help employees continue the benefits, right? And as in most cases in life, if you know, kind of fess up to your mistakes and lack of gaps of knowledge maybe, and just demonstrate you're doing your best, yeah, people are going to work with you, right? So that's not an excuse to not know the law. It's not an excuse to not follow the law. But I think maybe my guidance would be, if you did make the mistake, don't try covering it up. Just try getting it, fixing it as fast as you possibly can. Create the audit trail that you're doing so, and just demonstrating that goodwill is going to go a long way.
Absolutely.
Yeah, and that's a good point, Mike. Just the audit trail. Make sure you're keeping documents and records of everything that you're doing. You know, whether you're in compliance or out of compliance. You know, whether you're fixing a mistake or you're just following standard rules. Make sure you're keeping records of everything that you're doing.
Yeah, very good. Okay, so this is really specific, I think, to COVID, right? So I mean, I think most of us adults know what the word furlough means. We've known it forever, and never really applied to us or our world or our coworkers until let's call it April, right? When all the states and municipalities and the cities started shutting down, and business was impacted and had to lay people off. So clearly, I think everybody's pretty clear on who's impacted for when you terminate an employee. Is there any legal distinction between a terminated employee versus a furloughed employee? I want to make sure that people who furlough people with every good intention in the world of bringing them back, are they exempt from this?
Right. So, I mean, one thing just to point out, kind of term versus furlough, is why the word term varies. You know, it's a general, it's considered like layoff, temporary suspension, termination of employment. Furlough is also sometimes is considered to be a leave of absence. Now, there's not really a universal answer as regards to furlough, because it can vary. So are you supposed to offer a furloughed employee Cobra right out the gate? No. So the biggest thing that, and we've found even during COVID, because furloughs haven't been overly popular until recently. I mean, they've always existed, but as of recent, because there are some COVID legislations that have also impacted the insurance carriers as well. So generally, the plan coverage is lost, as a result of a reduction in hours, and it's Cobra qualifying event. If coverage is not lost under, the terms of the plan, there's probably no qualifying event. So the biggest thing that I can say, and things that we followed, internally here, is follow up with your insurance carrier first. In some cases, the insurance carriers, because these people technically are still, receiving, whether it's compensation or whether they're receiving, contributions towards their insurance still, why they're furloughed employees, with the potential of possibly coming back. Insurance carriers extended the period of time that these employees can remain on the active policy. So, if somebody's only going to be furloughed maybe 2-3 months, the insurance carrier may allow an extension on that active plan where you don't necessarily have to go the Cobra route. So once you decide, are we going to bring that person back? Yes, they'll remain just where they were on the plan. But if, obviously if it turns into a different situation where they're not going to be returning to work, in some of those cases, that's where you would offer Cobra. So I think the most important part is, if you find yourself in a situation where you might need to furlough, versus terminating an employee, or reducing their hours, it's always best to, follow up with your broker, in-house counsel, or, directly with your insurance carrier, to verify what those extensions might mean on that plan before, you actually go the Cobra route.
So really, this is, and tell me if I'm thinking about this the right way. So we have kind of our just normal business vernacular, where we generally understand what term means, we generally understand what furlough means. But at the end of the day, each state is going to have their own definition of legal definitions of what it means to be terminated, right? So,
Oh, absolutely.
yeah, so is this only a state issue, or is this a federal issue? In how should people, how should entrepreneurs be thinking about, how should business owners be thinking about how to get clarification on the definition for what to make the determination if it's Cobra eligible or not?
So the big thing again, if they have an in-house counsel, if they have a broker, the Department of Labor, the EBSA, also known as the Employee Benefits Security Administration, they're loaded, with information as far as, who needs to be offered, why they would need to be offered, do they need to be offered? Um, like I said, even following up with your own internal insurance company that you use for your plan benefits, they can also help in those situations too by referring to your plan documents that you have set up with that insurance carrier, because it can vary, depending on their location or depending how their plan was written out for them. Like I said, it could vary between, Blue Cross Blue Shield and UHC. I mean, it could just be totally two different things, and it could just be how your plan is written too. So it's definitely always a good thing to check into that. And, in talking with, some of our clients, they got a lot of good advice, just going directly to their insurance carrier saying, okay, I'm not terminating these employees. I'm going to furlough them, or I'm going to reduce their hours. What does my plan say that I can do first? Can we extend these benefits even though they're not actively working, or they're maybe not actively working a full-time status? So that's always your best bet before, you just kind of rush out the gates and decide, okay, let's just offer them Cobra. Um, it's almost like a leave of absence in a way, where you normally wouldn't take someone right off your plan and offer them Cobra if they're going to be on leave for 6 to 8 weeks or even 12 weeks. Obviously the longer they're out on leave, then, obviously that's a different conversation, but it really kind of mirrors on how your plan is set up with your insurance carrier.
And I appreciate going into this detail, Heather, because what we're going to kind of pivot the conversation, I think, to focus more on, how does this impact the employees,
Sure.
aka participants, here in a second. But I think there's a lot of employers trying to do good by people in this time, making decisions how they spend their PPP money, or even if it's not PPP, just how to treat their employees, and could easily mistakenly not have people classified correctly, and then all of a sudden be out of compliance on Cobra and end up, getting penalized for trying to do good. So,
Right.
Good advice. Anything that you would want to add, Stephanie?
Just kind of, if you are trying to keep furloughed participants on your plan, just make sure your plan doc allows for that or is amended to allow for it. So you might not even have language in your plan document right now, especially for like self-funded groups where you kind of make your own plan doc. You might not have language in there about furloughed employees. It might just be fire, rehire, or leave of absence. It might not be something furlough specific. So if you are going to put that policy in place, make sure you get that plan doc amended and get that out, make it available to all of your employees.
That's really good advice, Stephanie. Thanks. All right, let's pivot a little bit here. So obviously, the most important, I think, for this call is we're trying to give advice for business owners and entrepreneurs and executives of small and mid-sized companies. But like I said, we all care about humans. We care about our employees. Let's talk about how this change in the outbreak period impacts them. So what happens, people are hit hard financially in many cases, right, with COVID. So what happens if the participant doesn't pay the premiums after this new outbreak period?
Yeah, and I know, Stephanie, you probably get this question like every day, for working with our clients. But just like with a normal day in the life of Cobra, you have your payments due at the first of every month with a 30-day grace period. If you don't make those payments, the coverages are getting terminated retro back to to the date that you last paid for that previous month. So again, with even with the outbreak period, the extension of those guidelines for Cobra, if you get to your 60-day window, once that outbreak period end date is established, and you're going to be retro paying back to when you last made a payment. So say you made payments for March, April, and May, and then you just stop making payments, say the outbreak period ends the end of the year, then you're going to be responsible to pay back all the way to the point of when you last made that payment in order to have, no lapse in coverage and to have continuous, benefits from that date forward. So we would be notifying, carriers would be notified, employers would be notifying, third parties would be notifying those insurance carriers, when that last payment was made. And I know, Stephanie, you probably get that question again a lot from employers. And like I said, it's kind of the same, but it's different. But, if they're not going to make those payments, then it is going to be retro terminated back.
Yeah,
So
exactly.
really, go ahead.
Sorry, Mike.
Go
Yeah,
ahead.
exactly, Heather. The process is the same. It's just the deadline is different. So if it's still down to, if you don't pay the premiums, your coverage is going to be terminated as of the last date that you paid, or the last, time period that you paid for. It's just the deadline itself has been extended.
So our guidance to businesses here is that as they are giving their notification, notifying employees of Cobra, notify them of the new flexibility that they have in the longer grace period, so to speak, of the newly defined outbreak period, but no change. They still have to pay the premiums if to make the coverage effective, we'll still have to pay retroactively, same as the law has always been.
Right.
Exactly.
Okay. Can participants get an extension to elect Cobra or pay premiums?
So again, that falls under the outbreak period. So the extension is, yes, they're getting 60 days from whenever that outbreak period is over to whether elect or to make their premiums retro back to that last payment. Normally, like I said, they would have, the first of every month with their 30-day grace period, but this extension during this outbreak period, during the national emergency related to COVID, is now going to give them 60 days once that date is established. So, and we don't know when it could be. It could be the end of this year, it could be next year, but that 60-day clock will start ticking once an end date has been put in place.
And is there any guidance you would give? There's so much uncertainty. We just really have no idea when this end of the period is going to be, do we?
Yeah, the guidance that, I feel is just, if you're talking to employees, if you're talking to the participants, that are on Cobra, obviously that leniency is there, and, it's for them to, do whatever they need to do. If they need to save, if, they need to pay another bill instead of this one, it gives them that luxury, to, put this off a little bit. But, some of the advice I would give is just make sure you don't lose sight of it.
Yeah.
Make sure the employers are informing their employees that if they're asking, or, even when they're calling in to whoever's, administering that Cobra, just don't lose sight of those payments, because, once that outbreak period is over and they have 60 days, if they've chosen to wait 5, 6, 7 months to make those premiums and they've been using the coverage all along, it could be devastating as far as, claims that would have been incurred and things like that. So yeah, it's an extension and it's allowed and it's something that you can do, but it's definitely good to try to stay on task if you can.
Very good. Stephanie, anything before I move on to question number 7 here?
No, just kind of towards what Heather said there, is it's important to remember that you're not having to pay premiums. It's just you're getting an extension of it. And as we talked about at the beginning, Cobra premiums can be fairly expensive. So you're paying the entire group rate, with the employer and the employee portion of that premium. So if you go longer than a few months, when you do go to pay back, you can be looking at thousands of dollars just in premiums. So I recommend, maybe if you need to push it off a month to go ahead and do that, but then just try to get back to paying them as quickly as possible, because it is just an extension, not a, they're not waiving premiums or any sort of subsidy of those premiums, anything like that. So
Yeah, very good, very good. Okay, question number 7, will participants have Cobra coverage while their payments are pending?
This one's
so
good. Yeah, go for it.
um yes and no. So they cannot be denied coverage, but you can be expected to pay out of pocket. So if your payment was due on May 1st and come the middle of June, you still haven't made that May premium, your coverage can and most likely will be suspended until those premiums are received. Once those premiums are received, it would be reinstated back to that, no lapse date, and then those claims would be paid. But while you're not paying, it's going to feel like you don't have insurance.
It really is pretty much just that simple, right?
Correct.
Yeah, not gonna get denied services, but whether your check clears or not is gonna depend.
Yeah, and I think it all falls in like how everyone interprets what the DOL is saying, so one carrier may be treating it differently or interpreting it differently in their own mind as far as their day-to-day processing. But like Stephanie said, it's really just if you're not going to pay months and months of premiums at a time, there could be a disruption or suspension. Just because the carrier's a little concerned whether, they're going to release that big payment to that provider, hoping that, they may get that payment in at some point. So.
That's a really interesting point. So we've done a lot of webinars on like the PPP loans, how to apply, how to use the money, what's forgivable, how to apply for forgiveness, etc. And there's a central governing body, right? So Congress passes it into law, and Small Business Administration kind of sets the rules. But at the end of the day, it's really how the 5,700 participating banks interpret that single set of rules that you got to work with, right? So
Right.
you really use your bank, who is generally following the same set of rules, but everybody can interpret these things different. Are you saying that's kind of the same thing here with carriers?
Oh, yeah.
So you have one set of language from the Department of Labor, but at the end of the day, it's the insurance company you got to work with.
Oh, yeah. And Stephanie, I mean, correct me if I'm wrong, but it's a huge gray area. I've read through those guidances like over and over, I don't know how many times, and every time I read it, I could interpret it a different way. So, it really is best to just, do what you're supposed to do and follow along with, what you feel is right. Always, double check, in regards to, I always push the whole, if you have resources to legal counsel or an insurance broker, it's always good to, bounce those ideas off of them as well too, because it is all about interpretation. And right now, there could be 4 or 5 different ways to interpret what's out there.
Yeah. Let's jump ahead. So COVID specific, so if someone loses coverage, but it was the reason they lost coverage was not related to COVID, are they still eligible for the deadline relief? So does this new outbreak period apply if it was a non-COVID reason?
This is for everyone, so it doesn't matter if it was COVID related. Again, this is actually changing the guidance and the extension of the dates in Cobra in general. So it does not mean anything related to the COVID reasoning of why you would have been terminated or laid off.
So this is really good news for employers, right? Because
Oh, absolutely.
With the Families First Coronavirus Response Act, the FFCRA, all kinds of new leave that's eligible for employees, paid and otherwise, tax credit and otherwise. But the types of leave depended on the reasons, which, all of a sudden puts a hell of a burden on a small business owner, an entrepreneur, making these legal decisions about the status of an employee's leave, right? So
Right.
the good news here is that it's obvious the Department of Labor implemented this flexibility, the new outbreak period, because of COVID. But bottom line is the rule applies to everybody. It's a across the board change.
Correct.
All right, Stephanie, am I missing anything on this?
No, I was just going to say that I think they're kind of looking at everybody's being affected by COVID, regardless of whether that was the actual reason for your termination. I mean, your life is not the same as it was, a few months ago. So I think that's kind of more along the lines of where they're headed, is just to give everybody a bit of a break and a little breathing room.
Yeah, and I think, I mean, this is just my personal observation. Our government has erred on the side of expediency versus sometimes even accuracy, right? Trying to get this relief, whether it's tax credits or PPP money or rules and regulations, to give relief as soon as possible without then having to think about all of the unforeseen consequences and all of the what if scenarios, right? So this seems consistent with everything else that's been happening. All right, question 9. Can a participant stop coverage for just 1 month if their provider's office is closed? There a lot of, you think, hey, essential workers are first responders and medical workers. But if it's a non-essential service, if it's a non-emergency service, you could go to a hospital or your doctor's office and still be not even get to walk in the doors in some cases.
No, that's a great question too, because we get that a lot. I know personally for myself, my son has braces and the orthodontist has been closed for 3, 4 months. So, same thing while you're on Cobra, that, people feel like, okay, well, the office hasn't been open, so I'm not going to pay, April and May, but they'll reopen in June and then I'll start making my Cobra payments again. So no, so, while Cobra can be month to month and you can cancel it and stop it at any time, but if you're going to use those benefits or have plans to use those benefits in the future, it is continuous coverage that can't have a lapse. So, if you're paying, your Cobra for May and June, but then the doctor's office is closed in July, and then you're like, well, I'll just start paying again in August when they reopen. Unfortunately, if you're making that payment, it's going to be applied to July to allow for that coverage to stay continuous.
Yeah, I guess what you got to tell your employees in that case is, this whole thing's unfair, right? I mean, I
Yeah.
get you can't use
I
your
mean,
services,
it's
but
almost like saying, hey, I've driven 3 months accident free and then I have an accident next month, doesn't get you out of making your car insurance premiums.
yeah,
Exactly.
because
It's insurance.
yeah, this is
If something were to happen to you, if you were to get COVID, even though you can't get your dental work, but maybe you get sick or something, I mean, it's still insurance that needs to be there for you. And once you cancel that coverage, you can't reinstate it then later.
yeah, I mean, it's a whole can of worms, but it's kind of this twisted, unfortunate way that we in our economy we use insurance to pay medical bills, not just for the one-off events. Because at the end of the day, you need this coverage if you have a heart attack, right, or get a car accident, and you need to get admitted to an emergency room. And there's just an unfortunate, unfair component if you can't get into the orthodontist or some less urgent procedure is denied temporarily. So okay, good discussion and an important one. Question 10. Got three left here. And I'm looking at the clock. We get about 15 minutes. Hopefully we get time for a couple questions in here. So can employees use their HSA accounts to fund the Cobra premiums? I think this is unchanged. I don't think the outbreak period change due to COVID it has any impact here, but I think this question kind of has resurfaced.
Yep, you can absolutely make your Cobra premium utilizing your health savings account.
Yeah, and you're right that this has not changed. This is just no change with COVID relief. This is just the way it's been. And it's important to note that it's a health savings account, not an HRA, not a flexible spending account. It has to be that health savings account where it's
Correct.
actually your bank account.
Yeah, and it's funny because it doesn't come up a lot, but ever since, COVID's entered our world, it's definitely been a very popular question. Not a lot of people realize that that was something that they could do.
And why is it, Heather? Is it people generally budget out their medical expenses for HSA and then they depleted those funds and so they never had to think about it in this way?
Yeah, I think that has a lot to do with it, but I think a lot of people just don't have a general understanding of what an HSA is. I think a lot of times they confuse it with like an FSA or an HRA, like Stephanie was saying. Um, they don't necessarily think it has anything to do with paying a premium of some sort. It's mostly related to, did I go to the doctors, or can I pay for this? Can I pay for that? They don't. Nobody really takes into consideration that that's something that the HSA can contribute to.
Hey, can you let's do this. So I'm assuming there's a few policy wonks on the call here that do know the difference between FSA, HSA, HRA. Give us the 8th grade version here, just so we all understand what the differences in those 3 buckets are.
Sure. So your health savings account, which I kind of like to call it the new age 401k for your medical. So it's definitely a plan that continues on from plan year to plan year. You can take it with you when you leave. It's a great way to save money for into the future to apply towards medical costs. Oftentimes it's, if you're participating in a high deductible health plan with your employer, they're going to offer the HSA. And again, it can be transferred and taken with you when you leave. You can transfer it to other HSAs, if you start working for another employer. Your FSA is going to be a little bit different. That's your use it or lose it, and it's not tied to any plan. So you don't even have to be participating in your employees' benefit plans to offer the FSA or to be a part of the FSA. Your FSA is going to be more related to out-of-pocket expenses covered from your medical, dental, and vision. So your co-pays, glasses, dental exams, anything that the insurance isn't covering what you're left to pay for, you can use your FSA. And then of course your HRA, your health reimbursement account, obviously is, I don't know, what would you say, Stephanie? That's more, some of the groups that we manage and clients that we work with, it is definitely more of an assistance to help with their deductibles to their plans. Yeah. And it's more medical and prescription. It's definitely
Typically
something that,
funded by the employer.
right. And it can roll over into the next plan year if the employer, has set it up that way. But it also can be a use it or lose it as well. And then in some cases, employers can require those, you to incur each pay period before you can utilize all the funds that they're funding.
All right, I think that was the 2 minutes well spent. So thanks for the clarification. All right, last 2, and we'll try to get a couple questions. So if a participant just got enrolled into company's benefits, why is it that they might receive a Cobra letter?
So also known as initial notice, Department of Labor notice. It has a couple of different names, I think, Stephanie, from
General notice.
General notice. There's a lot of different names to it, but really the idea of the letter is for employers to get that out to their employees, letting them know what their Cobra rights are should they ever lose those active benefits. So it's basically just kind of giving them a preview of what to expect, should you lose your benefits and need to be offered Cobra or the extension of electing Cobra.
Is that just a nice thing to do, a proactive communication, or is that a requirement under the law?
It's a requirement.
Yep.
Yeah.
Absolutely.
Yep, you have 90 days to get that out to your participants when they are first enrolled in your benefits. And then if the language changes in the notice, you should send out a secondary notice to the participants just so they have that updated language, that updated letter. And from the employer side, it kind of just allows you, it sets the stage for you to enforce Cobra regulations down the road because you've given them all of the required notices.
Yeah, I think safe to say we threw this one in. This is really almost kind of nothing to do with COVID, but because COVID has created so many Cobra instances that this is now a recurring question. We think about, okay, so I would say not all employers even knew they had to do it up front like that. They think about Cobra as an after the fact when you terminate, but this is in fact a requirement. but maybe even more lose sight of it when, hey, this person may be with me for the last 3, 4, 5 years. They had a qualifying event in their life, got married or divorced. They were on their spouse's health insurance. Now they're going to enroll. It really is tied to the new enrollment of the benefit, not the new employment, when a lot of these notices coincidentally go out, right?
Exactly. It's a good practice to get into to provide this notice at every open enrollment. It might be a little bit of overkill, but you're always, better providing extra notices than not enough. And that way you don't really have to keep track of who did I give it to last year. I mean, you always should definitely please keep track of everything. But that way you're always on top of it, and you're always making sure, every open enrollment you're providing all the participants that notice. It's a good way to just make sure they have the most recent notice. They've got all of the newest information.
Very good.
Right. Yeah, just because, yeah.
You know what, Heather, we've got like 8 minutes. I think this is
No, I was just gonna add on real quick too, because like Stephanie was saying, it's a good practice just because the model notices do change. So language changes in that, not all that often, but sometimes it does, and it's important that they have the most updated notice.
Yep.
You guys are gonna knock this one out of the park in 15 seconds flat. It's a straightforward answer. How much time do participants have to elect Cobra coverage after they're eligible?
Well, so outside of the outbreak period, the normal would be they have 60 days to elect. They have 45 days to make that first payment from the date they elect. And then going forward, their payments would be due at the first of every month with a 30-day grace period. So that's the norm. That's what we're used to. That's what's kind of been established for years and years. Adding in that outbreak period now obviously has extended those extensions, if they've had a qualifying event or have been participating on Cobra since COVID and the, relief period has started. But those are the norms. And again, the only thing that's really changed right now is that 60-day election window once that outbreak period has a stop date.
Yeah, right. Okay, so real quick, and I'm gonna get to some Q&A. So if you're unfamiliar with Assure, we provide human capital management software and services. That's payroll, human resources, benefits, and outsourced HR services like Cobra administration. So if you want to do all this in-house, you certainly can. Webinars like this are designed to help you do so in implement some best practices, understand the law. If you simply want some help staying compliant in kind of diverting your internal resources elsewhere, hopefully on growth initiatives, not administration and back office, we would love to have that conversation. But back to the topic at hand. If you have any questions, I see some of you guys have been putting in questions already. The GoToWebinar interface has an opportunity for you to pop questions in there. And if we don't answer them, we'll do our best to follow up with you and get answers to your questions. So let me pop this out and see if I can ask some questions for you guys. So getting questions about handouts and whatnot. So we are recording this entire session. Tomorrow this will be available on the website. Anybody who registered, we're going to send you a link to that, and so you'll have this entire presentation on demand to watch whenever you want or share with whoever you want. We contract with a third party for Cobra administration, and our board chose to lay off a few people before the end of March. We were made aware of the change in regulation and learned this company is willing to let us know, but had no plan to send updated notices. So we ended up having to send them ourselves in source language, etc., for an appropriate notice. Wonder if others have had this happen and what did they do? So more of a use case. What is the best practice? Is Heather, Stephanie, have you guys seen companies in that scenario?
I don't know if we've particularly run into any situations. I know a lot of people were concerned, and I know, in working with some of the groups that we have, I think they had a couple scenarios where they had done some furloughing and some layoffs prior to Cobra looking for some guidance, and as well, we recommended them following along with the normal protocol of offering Cobra. But I don't know if we personally ran into any issues with that happening prior to the outbreak period being established. Have you run into anything like that, Stephanie, on your side?
Nothing that I've heard, no.
No, I mean, obviously you would offer them Cobra, or you would get the notices out. Now they may not, they may not fall under the extension, of that 60 days that everyone's getting. But it's important to, make sure that they're still getting the proper notice to continue those benefits.
Jen, if you got a question on that, just ask Assure email on our website, and we'll be happy to hook you up with somebody to continue that conversation. I got a question from Lee. Any information how this applies to statewide continuation, which is mini Cobra for employees less than 20?
It does not apply to state continuation.
Very good. There's your answer, Lee. We have several employees do not provide updated address. Are we subject to legal action?
Your job as an employer is to provide the notice to the most recent address that you have on file. So whatever the last address that they gave you, or the participant employee gave you, that is all you are required to do.
Correct.
Yep. If they notify you that, even after their termination date, a month later, they call you, they say, I still haven't received my Cobra notice. It's probably because I moved. Here's my new address. You should then go ahead and send them an updated notice, or, a notice to that new address, but without them contacting you and letting you know about that new address, you're only responsible for sending it to whatever your most recent one on file is for them.
Right. So last noon.
Let's move that upstream a little bit further. What responsibility? So beyond maybe best practice, but also what is the minimum legal responsibility to obtain most recent address? I mean, because what your answer made perfect sense to me, but are there additional requirements like, hey, if you never even attempted to get a current address from this person the last 3 years, do you have any culpability here?
Nope. All that's going to fall on the employees. That's going to be the employee's responsibility to notify you of any address change and provide you with their most recent address. You're not responsible for tracking them down and trying to get updated information from them.
Right.
Okay, very good. All right, I think we got time for one more here. For rehires or recalls from layoffs or furloughs, do we need to provide these employees with the new hire Cobra notifications?
I would recommend it, especially right now, because there has been some language changes to the model notice. I don't know if it's, a practice that you need to follow all the time, but I mean, and it depends, I guess, Stephanie, what would you say with some of our employers? I guess it depends on how long the employee's been gone. Sometimes if they're treating them as a new employee and they're having to go through their waiting period again for the benefits,
Definitely.
it's usually best practice to get that out because it's almost as if they're starting brand new. If they've been gone maybe 30 days and you're applying them right back onto the plan as if they've never left, it may not necessarily be something that you need to have sent out. But I think, in my experience, a lot of people just kind of fall into the routine of just sending it out, just to make sure that they're always covered and making sure that the employee is always aware of what's going to happen next.
We're going to go over time, but this is a really important question. It's a follow-up from Jen, who I read a question earlier. So a clarifying question on Cobra elections, Cobra election notices that expired before 3/1, are they not eligible for the extension?
So
that is correct. If I'm understanding the question, so if they terminated like maybe in December, so their 60-day election period ended maybe sometime in February, their Cobra does not, their election period, nothing extends beyond March 1st. No, they would not be eligible for the extension.
Okay.
Yeah, if that's what she's asking, that's correct.
Right.
Yeah. And Jen, again, if you need more clarification, shoot us an email. We'll be happy to follow up. So got a bunch more. Unfortunately, we're not going to get to them, but Heather, Stephanie, really good conversation. it's still surprising to me how much there is to know about something a law that's been in place for decades already, over one simple change to the covered period here. So really important discussion, important for entrepreneurs, small business owners, executives of growing companies to understand all this stuff. So thank you for your time. Thank you everybody for attending. The recording will be available online, and if you need any help in this area, we'd be happy to help. Thanks so much and have a great day.
Thank you.